if so, the only thing that really holds me back from spending Bitcoin more than I do is capital gains taxes. That it introduces an accounting burden and a cost burden, but mainly it's the accounting burden of if you just do all your little transactions and each one of them is technically a sale that triggers capital gains taxes, that's a mess. And it's left like that on purpose because governments don't want anything other than their currency being treated as currency.
In a recent interview on Reinventing Money with LYN ALDEN, several key topics are discussed, including decentralized social media, the sustainability of the euro, and the potential for a Bitcoin standard. At the time of the interview, Bitcoin was trading around $57,000, showing a 1% increase in the last 24 hours and a 1% decrease over the past week. The conversation delves into how these issues are interconnected with global economic stability and individual freedoms. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
So I think, if someone were running this from a bullish Bitcoin perspective, the first step is to make it legal tender. Or another step is to say, well, the first, 1,000 euros or 2,000 euros spent per year are not taxed, right? So it's like, okay, if you're going to sell 1,000,000 euros, then maybe we'll tax that. But if you're going to sell 1,000 euros of it because you're actually buying stuff with it, we'll kind of erase that accounting burden, and you can increase it over time until it becomes legal tender. Basically, there's political realities in a country, and the consensus is nowhere near the things that we're talking about now. So this to be very considered outside the Overton window, kind of like how El Salvador is this kind of outlier in the global space, even though they're getting good results from having done it. I think not for the most part. So the dollar's in a different position because there's over $13 trillion worth of dollar-denominated debt held outside of the United States. Ironically, it's not even mostly owed to the United States. It's owed to lenders in China, lenders in Europe, lenders in Japan, lenders, everywhere, including some in America. And so I would say it's a rather different network in that sense. If anything, the dollar could be temporarily strengthened because you'd have a fall of like the second or third biggest currency, depending on what metric you're looking at. And that disperses somewhere, and it wouldn't disperse just entirely in the, say, gold and Bitcoin. It would probably disperse into other workable competitors, as well as whatever currencies emerge from that. Again, the cessation of the euro to exist is not on my near-term bingo card. These things can obviously happen sometimes. They can take longer than you think, and then they can happen faster than you think. But those types of outlier events, even though I'm not bullish on the structure of the euro, I think it has structural problems. I still wouldn't expect it to go away anytime soon. I mean, I think that any large pool of capital, if they analyze Bitcoin and they become bullish on Bitcoin, it makes sense for them to have a non-zero Bitcoin position, right? So if you're running a corporate treasury, if you're running a pension fund, if you're running a central bank, I do think it makes sense to hold a non-zero amount of Bitcoin. Basically, it's a scarce asset. It's incredibly well performing. It's got a very strong network effect. 15 consecutive years is by far the largest cryptocurrency, backed by proof of work and a very simple design. Obviously, large pools of capital don't really go all into things. They don't really expose themselves to tail risks in that way. But I think for them, the first step is to just not have zero. So yeah, if I was running any particular pool of capital, whether it's a big private pool of capital or public pool of capital, one start is just have a non-zero Bitcoin position. But generally, people in these positions think in terms of career risk. So it's more about what makes them look bad, or what risks their job and their perception versus what is, kind of strategically useful for the country over the next 20 years. And so those types of decisions tend to be very slow. The funny thing is in financial markets, being wrong together is generally not that bad for your career, whereas being wrong alone is bad for your career. So if you make a contrarian decision and it doesn't work out, even if it works out in the longer term, if it doesn't work out in the shorter term, let alone if it doesn't work out at all, that's how you get fired. That's how you get bad outcomes. Whereas if you're kind of wrong but in consensus, then it's fine. No one gets fired for not having Bitcoin on the balance sheet, right? And so that's kind of the safer play from the career perspective, even though from the pool of capital's perspective, I think having a non-zero amount of Bitcoin is prudent.
As we just heard LYN ALDEN discuss Bitcoin's potential as a transformative global reserve currency, let's now turn to another key topic she addresses: the role of decentralized social media in protecting free speech and individual autonomy. Alden highlights platforms like Noah as essential in challenging the control and censorship found in traditional social media. By creating an environment where users have control over their data and interactions, decentralized platforms have the potential to redefine how we engage online. Let's hear more from LYN ALDEN on how these platforms could safeguard our digital rights and reshape communication.
Which Twitter's done in the past. I mean, under prior management, for example, when India would say to remove stuff, they would often go to the courts in India and really push back on it. And one of the interesting things is under the current era of Twitter ownership, Musk has opened up Twitter more in the U.S., but then he's actually been more agreeable to takedown requests in other countries like India and Turkey, if you look at the statistics. So the fact that he's pushing back in Brazil is interesting. I definitely think that, in my opinion, it's good when centralized platforms push back with whatever tools they have available, but they're inherently vulnerable. The way that I kind of put it is that, there's certain things that are outright illegal, threatening people, doxing people, things that cross into libel, like that kind of thing. That's different than just quote unquote disinformation, right? Because the truth is a very complex, multifaceted thing. No one really has a monopoly on truth. There are things that are more objectively true than others. For example, there are videos that are intentionally edited to change how they operated. That's a fairly objective type of disinformation. So there is a lot of disinformation online. The problem I would have with it is that politicians are a source of a lot of that disinformation, right? I mean, state propaganda is one of the original disinformation peddlers. And now we have more decentralized disinformation, which means the government can do it, as well as individuals or groups can do it. And they can do it both for their own citizens, or they can, some country will plant disinformation in another country to try to increase polarization. So I do think that there's, it's the responsibility, I think, is increasing on the people to be able to spot disinformation, to think critically, to sort out right from wrong themselves, rather than a government kind of mandating, restrictions on things that are actually otherwise legal to say. Like a lot of the things that governments remove from these centralized platforms are not crimes in real life. Like you can say these things in real life and not be under pressure because they're not actually legal. They're not threats. They're not doxing. They're not like libel. They're not, they don't cross into those areas, but they just don't like the fact that they're spreading online. One of the solutions I've been a proponent of is Nostr, which is decentralized social media. And the important thing there is that it's not as though it's without restriction. There are still algorithms that help you sort out spam from real content and things like that. But the interesting thing is that the user gets the choice of algorithm. So there's like this open source pool of information out there that no one can really kind of inherently censor. Kind of like it's very hard to censor the internet itself. Nostr is kind of like that. And then different clients can access it. And different clients have different algorithms, and even some clients can have algorithm marketplaces. So you can pick your own way of filtering through content, and I think that's a really helpful way of thinking about it. So it's obviously a very complex topic, but I think technology eventually moves in such a way that it almost becomes moot. Like they can censor centralized platforms, but then there are decentralized ways to go around it. And then the question is, where do most people get their information from? If they get their information from the more censored or pruned areas, they're going to be prone to certain biases, which is not just the government's bias, but also whoever's running that platform can tweak the algorithm to support things that they want to support or push down things they want to push down. So whether it's governments or corporations, I do think that big centralized social media with either censorship or just algorithm control is a danger. So it's still small. It's mostly in the Bitcoiner space. But what I find interesting about it is it is probably the most technically dynamic of all the alternative options. So a lot of these other ones, Mastodon is federated, meaning that different parts of it will be run kind of like by their own dictator. And if you get banned in one, it's really hard to move around. Nostr is interesting because it's more tied together while still being decentralized. You can basically bring your identity and your followers around, and there's no like areas of control really. Blue Sky is kind of like that in theory, but then in practice, it's more centralized. Whereas Nostr is actually this kind of bottom up, more truly decentralized one. So it's not like big enough that it's really making a dent broadly, but it is making a dent, I would say, in the Bitcoin space. And so for one of the kind of the useful outcomes of it that makes it different than just pure social media is it makes Bitcoin wallets better. So for example, if a bunch of Bitcoin proponents and they go to dinner and one of them pays and the other ones want to pay them back, it used to be that the one who paid would have to like send lightning invoices to everyone or say what their on-chain address is. Whereas now with Nostr, it gives Venmo-like capability for Bitcoin wallets, meaning you can just look someone up and pay them if they're on Nostr. And it just so happens at the current time, because Nostr was invented by people in the Bitcoin space, it happens to be kind of a Bitcoin adjacent or Bitcoin dense ecosystem. So a lot of people are on it, and it's very useful for them. It's just not big enough yet.
LYN ALDEN's discussion raises important questions about the connection between emerging digital currencies like Bitcoin and the evolution of social media platforms. We'd love to hear your thoughts on a few key questions. Could decentralized platforms like Nostr become the new standard for online interactions? How might they coexist with digital currencies to build a more secure and equitable digital ecosystem? We invite you to reflect on these topics and share your thoughts in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.